What's up, people? Welcome back to Invest with T-Claus. My name is Tevi, and this is a channel dedicated to my investment journey, along with coverage on Tesla, NEO, Virgin Galactic, and ChargePoint. Come for the information, stay for the fun clips. So here we are, it's the end of February, and we are in full market correction. In most cases, the tech sector and high growth stocks have been hit the hardest. We're seeing anywhere between 20 to 30% decline this week alone. And it's a great reminder to most of us, if not all of us, that even though the stock market is enticing and very attractive, it's not uncommon for these type of falls to occur. Do you know what else is attractive and enticing but can't seem to avoid the occasional fall? Well, let's take a look here. I kind of feel bad for laughing at those two models, but that's kind of how the market's been acting, right? If you think about it, it's been, for the past couple of weeks, it's been trying to recover, but just can't seem to find its footing. And then the second one with that spin, that's just extra stuff that doesn't need to be done. And frankly, since the year started, that's how the market's been acting, right? Consistently doing extra, hitting record highs after record highs. And at one point or another, you do need to re-level and come back down to earth. And that's exactly what happened. So the good news is with every fall comes the opportunity to learn and improve. And that's pretty much where we are now. So anyways, let's get back to the video. All right, so the topic for today's video is going to be on Virgin Galactic. And as you can see on the chart being displayed, their stock price was not spared at all by the market correction. They're coming in at just over 24% decline for the week. And on Friday, they closed out the week with the Q4 2020 earning call, during which they discussed their performance for the previous quarter, as well as what we can expect moving forward. So the focus of today's video is going to be on the earning call, what they discussed and shared with us. I'll then get into what I plan to do about the information that we learned and wrap things up with the weekly performance review by percentage gain or loss for the portfolio. All right, so let's get into the video. So for today's discussion, I'm not going to focus so much on the financials because we know that Virgin Galactic is a pre-revenue company, meaning that their earning per share is expected to be in the red anyways. In this case, it came in at negative 31 cents, which is on par with what Wall Street had estimated for the stock. So good news. Now, what was more important to me was that they actually have revealed the cause of the failure for test flight number 28, which was attempted again on February 13th earlier in the month. And now we know that the reason for the failure was due to EMI, or electromagnetic interference. And so the fix that they've been working on these past few weeks has been on making the onboard computer more insulated so that it is not impacted or affected during the next test flight. And that's really what the focus has been put on over the last few weeks and moving forward, so that during the next attempt, the onboard equipment is better shielded from interference. Having identified root cause is awesome, but it ultimately means delays for the whole program, right? So now we're expecting test flight 28 to take place in May, and that will be followed by 2 additional flights before we can reach full commercialization. The first flight is going to be with the pilots, some onboard cargo, as well as some crew members that are employees of Virgin Galactic. And the second one is going to be with Sir Richard Branson and will kind of serve as the first official commercial flight for the brand. And that, again, will be at a later date. Now, they did not officially say when those flights will take place. We only know that in May is when the cadence restarts for all those flights to take place. So it's really no surprise that when we put it all together, between the delays for the test flight, the market being what it is right now, that we saw an even sharper decline in after hours for the stock. But it wasn't all bad news that was shared. So even though the road to commercial flight was delayed or is now delayed by a few months, they came back and announced that they have secured a contract for the Italian Air Force and will be flying some payload along with 3 members of the Italian Air Force to space somewhere in mid to late summer. And that, again, will be a revenue generating flight, which is something that they did not have at all last year. So that's progress. In addition to the news around the Italian Air Force flight, they've also come out and told us that they have completed the manufacturing of their 3rd spaceship. And this is going to be Spaceship 3, due to release at the end of March. And what's exciting about this is that this is, again, expanding on the fleet in preparation for commercial flight. One of the cool things about Spaceship 3 is that it will be more efficient and set to have a better turnaround time when it comes to, going to space and back. So really gearing up for commercial flight moving forward. There were a few other things covered during the call, but in my mind, they're not that noteworthy. But with that said, I'll link an article in the description below and you can go read that. My main takeaways from the earning call was this. One, space is not easy. And frankly, I would rather have them have a few delays, and be extra cautious to ensure that when they do go commercial, all the kinks have been worked out of the system, right? Because at this point, if we were to have a crash or something catastrophic happen, it would set us back many, many years. And we don't want that. So a few months here, a few months delay, I'm perfectly okay with. The second thing that was noteworthy to me is the flight with the Italian Air Force. That's big, right? Up until now, they really haven't been generating revenue. And this is a step in the right direction. And if they can secure more contracts with other people in the private sector, whether it's another branch of the military, foreign or local, I think it's for the better, right? So that's a step in the right direction. The other item that was noteworthy to me that I didn't realize going into the call, and that's surprised me in a good way, is that the company is well capitalized at this point. They have $666 million on their balance sheet in cash, and they're operating at a $60 million burn rate. And what's nice about that is that if you do the math, that gives them just over a year of running capital, assuming that no more cash comes in whatsoever. But again, if you remember, they will be flying the Italian military into space. They have contracts with NASA, which will also will be generating some revenue for them. So there's going to be money coming in this year, which is much better than where they were last year. So again, ultimately, space is not easy, but they're making progress, and it's definitely moving in the right direction. Okay, so what will be my approach in light of the information that was shared during the earning call? Now, keep in mind that this is, again, just simply my approach and what I plan to do, and it is not to be taken as financial advice, as I am not a financial advisor. With that said, it's pretty simple, actually. Virgin Galactic went IPO in October of 2019, and I started investing in the stock in around summer of 2020. At the time, the stock price was around $14 in that $14 to $15 range, and that's when I started building my position. So based on my previous videos, that my price target for Virgin Galactic 5 years out is $150. And again, this is based on the fact that I expect that by then, the space tourism will be well underway. Additionally, they will be doing many private missions, whether it is with NASA or other governments around the globe, in addition to the supersonic flight opportunity that they will be pursuing and launching by 2024 or so, somewhere around there. All right, so between those three sides of the business, again, I expect that the stock price will soar and get to that 150 range. And for that reason, my goal number of shares for Virgin Galactic is 1,000. So I do welcome this setback that we saw. Obviously, if it drops more, then again, that's good news for me in the short term, because as you can see on the screen here, my average price for Virgin Galactic has gone up, right? My average cost has gone up from that $14 range to $24, and that's because I've been buying more shares. So the closer to that $24 in the short term I can get the price, the better off I will be. If I can reach that $1,000 count share and keep my average below or at $30, then that means a 5x on my investment by the time we get to $150, which is a pretty good return over the next 5 years. Now, this could be much better, right, in the short term, depending on how quickly they execute and get commercial flight going. But at a minimum, that's what I'm expecting, and that's what my whole investment thesis for Virgin Galactic is based on. All right, so let's get into the weekly performance review by percentage gain or loss for the portfolio, and I'll bring it up on the screen here. So, we already know that it was a pretty brutal week, right? And you can already see that as we come into the week in pre-market hours, we were already down by 6.04%. It didn't get any better as market opened, and we closed the day at 13.44% in the red. From there, Tuesday didn't get any better. We went down as low as negative 0.2154%. That was pretty bad. But shortly after that, we tried to recover. So that was Wednesday. But that, really was for nothing. Getting into Thursday, we saw another sharp decline, and that was by far the sharpest decline of the week, landing us at 33.54%, 54% at the lowest point. And then from there, getting into Friday, we saw, a slight uptick, giving us a little bit of positive or a little bit of relief, frankly, to 26.39%. So climbing that mountain a little bit, but then settling back at the 30.36% in the red mark for the entire week. So pretty sharp drop throughout the week here. So again, no major surprises here. We knew that the portfolio got hit really hard, considering that I am invested in high growth stocks. And really the whole name of the game this whole week, and the past 2 weeks, honestly, has been about averaging down on all of my positions where it made sense. And so that's what I've been doing and will continue to do as we're seeing this weakness continue over the next couple of weeks here before the inevitable rebound and recovery. All right, people, this will do it for today's video. If you have any questions or would like to provide me with some feedback, please do so in the comments below. Also, if you found today's content insightful or that has helped you in any kind of way, remember to hit that like button, share with your friends, and for my newcomers, remember to hit the subscribe button and ring the notification bell so that you don't miss any future content. As always, I post every Sunday and occasionally during the week. And until then, thank you for watching. Stay humble, hustle hard, and I'll see you in the next one.